Hey, what's good, son? It's your boy, Eon. You already know me. Look, son, this is Forever Slow Stroking the Podcast, episode 83. Thank you all for tuning in. This episode, I really want to go ahead and get into some option trading strategies, right, that will be beneficial in a bearish or very volatile market, right, son? So let's go ahead and get right into it. But first, I want to say I'm not a financial advisor, so everything I say on this episode is for educational, entertainment purposes only, right, son? But also use the links in the description below to get free stuff, free shares on Robinhood, Webull, free money on Voyager, free money on Crypto.com. You know how it goes, son. But look, so first things first, right? When it comes to aggressively trading options, a lot of people say, look, well, not a lot of people, but my theory is if you want to play aggressive on options, do whatever is possible to put the premium in your pocket. And you say, all right, what is premium? So first, let's go ahead and talk about what is a call, right? A call is an option strategy or option, technique that you could play when you feel like the price of a security or stock is going to be bullish. And when I say bullish, I mean it's going to go up in value. A put is the option contract or the option type that you would, buy when you feel like the market is going to go in a negative direction, right? Or bearish, right? Bearish is negative, bullish is positive. So when you're thinking the market is going to go bearish, you buy a put. When you think the market is going to go bullish, you buy a call. But in order to get into these premiums, whenever you buy a contract, an options contract, you have to pay a premium. The premium is the cost of the contract overall, right? Not the premium is the cost that you pay to purchase the contract, or the cost that whoever's purchasing that contract is paying, right? So if you're selling a put or you're selling a call, you receive that premium in exchange for the contract or contracts. But if you're buying a call or you're buying a put, you pay the premium in exchange for the contract or contracts. So that's how that joint works, right, son? So you can manage your risk very well and use premium to play the market direction, right, son? But first I want to say this. High volatility in the stock market, right? Whenever there's high volatility, especially in a stock price, 9 times out of 10, the premium will be higher. So if you want to, chase the premium, look for stocks that are swinging crazy, right? Such as SPY. SPY swings in a crazy way, son. Especially this past week, son. It went down from, what was this? 444 to 410, then back up from 410 to 438 in a matter of just a few days, son. So that's how there's a lot of premium in that stock or in the options contracts within SPY. So that's one thing, right, son? But so when I say manage your risk and use the premiums to play market directions, right, what you would do is if you see a bearish market, right, if you have a bearish market or a stock that's bearish, you can sell calls to hedge your positions, right? So let's say you're in the stock, right? You have over 100 shares of it. You have maybe 200 shares or 100 shares of a stock. You want to make sure that your portfolio does not lose value or significant value when the price of the stock goes down. So what you do is you can sell calls. You can sell calls, which is, when I say sell calls, I mean you can give somebody the option to purchase your 100 or 200 shares in a contract, right? So in order to do that, they have to pay you to even consider the contract, right? And you could always buy yourself out. So if you have a call that you sell a call on, I don't know, let's say a stock XYZ. You sell a call on XYZ because you have 100 shares of it. You'll get paid whatever price it is to do this deal. Let's say you get paid $2, right? If you get paid $2, that's really multiplied by 100. So you're getting $200 just to give somebody the option, give somebody the ability to buy your 100 or 200 shares, right? Well, your 100 shares, because I said it's $2 and 100 shares. So to buy your 100 shares, somebody has to pay you $200, plus they have to pay you the price per share times 100, right? So worst case scenario, you have to sell the shares, right? You still get the cost the cost of the shares of 100 shares plus you get that extra $200 premium. That's valid, right, son? So in a bearish market, you can collect that $200 premium and use that $200 to buy puts on the same security or maybe even another stock, right, that you feel like is going bearish. This is a perfect strategy for a lot of people that don't have a lot of money, right? You sell calls, use that money that you get from from the calls, and you buy puts, right? You buy puts, you take only 10 to 20% profit, right? So 10 to 20% profit of that $200, you're looking at, what's that, $20 to $40, right? You take that $40 profit, right? Now you have a new nest egg, right? That $40 profit, you're going to put that to the side because now you have $40 to do with whatever you want, son. But you still have the original investment, right? You still have your $200 that you could use to buy yourself out of this contract if it does not go your way. And also, you can just let the calls expire worthless, right? And what happens, right? With this strategy, you'll be able to bring in profits that are at least 100 to 120%. 100 and 120% profit each trade, that's valid, son. Now, mind you, you're doing 2 trades in order to make this happen. But if you're doing this every month, every week, your account should flip in a very well-mannered way, son. Also, like I said, if the puts don't work out, let's say you buy puts on a company different from the company that you sold calls on. You bought puts on this company, it didn't really work out. You still collect 100% profit on your calls, on your covered calls, if you allow them to expire worthless, son. That's valid. That's a strategy. So, option strategy for a bearish volatile market: sell calls, use that money to buy puts, take that money. Whenever you see yourself getting their support, close out, take your profit, buy calls with that bread that you reinvest that money, buy calls, sell it at the resistance, son. You do that over and over again, you're going to be a dangerous person, son. I'm telling you, son. That's valid. But also, some stocks that I want to kind of call out this episode. With all the Russian war stuff that's going on, son, it's crazy, son. Prayers to the Ukraine, prayers to those that are fighting in Russia as well, son. Not in Russia, but just prayers to everybody in battle, son. It's a crazy time, son. But Raytheon Technology, Northrop Grumman, Lockheed Martin, all defense contractors, right? These defense stocks are going crazy, son. Raytheon gave me over 100% profit the other day, and it was just a quick swing trade, son. That joint is valid, son. Look. If you want to really make money off of what's going on, son, look into the defense stocks, right, son? No need to short these stocks. Just look to them. Find yourself a good level, buy in. I would consider doing a day trade or I would consider day trading or swinging them if you feel, confident. But me personally, I'm a get in and out type of person with this current market, unless I'm doing this strategy where I'm hedging positions by selling calls and buying puts, right, son? So that is a great one, right, son? In addition, SPY could continue to run back to $480, right, if it wanted to. Now, mind you, I see a potential cap at around 457, 458, even 460, but that's something that I'd be looking out for. What else we got? Lucid Motors has earnings coming up Monday, son. It's crazy, son. Curious to see what they report. I don't know if I'm going to play it or not. If I do, it'll be a pure gamble play, son, but that's how it goes. But it's a lot going on, son. Also, watch out for Costco. Costco is a great company to trade, son. Also, Costco's earnings typically are valid, son, especially with, coming out of holiday season. You had Christmas, what else? Thanksgiving. People shop at Costco for gas and so many other things, just day-to-day, like grocery shopping. Like, Costco brings in a lot of money, and they've been expanding, so that's valid as well. Look, son, this is Forever Slow Stroking the podcast, and I'm just here to give you guidance and perspective, son. If you need me, just hit me. But for now, son, I got to go. Also, use this strategy, son. That strategy is valid, and it will make you some money. Like I said, son, I got to go. Oof.